According to a financial expert, Brussels has woken up to the dangers posed to EU member states if it raids London's critical assets. Ben Wright, a commentator for the Financial Times, believes that the City of London will continue to be a prominent European financial market. Clearing houses are intermediaries between buyers and sellers in a financial market. The clearing house verifies the transaction and ensures that both parties are adhering to their contractual responsibilities. European Union officials are aware that many British businesses prefer staying in their current location despite their desire to relocate to the EU. The London Stock Exchange, LSE, owns the clearing house, LCH. As Mr. Wright points out in his column for The Telegraph, it manages around 90% of all euro-denominated futures, with a notional value of somewhere like $100 trillion. By making all euro-denominated derivative transactions clear in the Eurozone, the European Central Bank would seriously damage its reputation as an open economy and as a global currency, says Mr. Wright. Even if the majority of dollar-denominated trades are still settled in London, the United States is happy with it. William Wright, a financial analyst with the think tank New Financial, was also cited by Mr. Wright. When it comes to doing business in the EU, clearing reminds Brussels that London is a popular site for many international companies. Even if EU officials were to force corporations to clear their euro-denominated trades in the Eurozone, it would simply serve to accentuate this point. Equivalence was not granted by the EU after Brexit, which means that businesses must follow two sets of rules when doing business with the rest of the EU. Some cities, like Amsterdam and Paris, saw a rise in share trading as a result of this. The EU Financial Services Commissioner, Mairead McGuinness, warned last week that a decision on whether the UK clearing houses will continue to have equivalence will not be made until next year. She replied, "In early 2022, I plan to recommend extending the equivalence decision for UK CCPs. To allow us to update the EU CCP supervisory mechanism, the equivalence period should be extended long enough. To avoid a financial cliff edge for EU market players in the short term, we must take an equivalence decision to avoid this risky over-reliance on a third nation," this proposed way forward aims to achieve. The United Kingdom has claimed that it cannot return to EU norms because doing so would be a violation of the country's decision to leave the EU. Next week, the EU and the UK will meet to discuss the Northern Ireland Protocol.